Trade and Finance holding a hearing this morning on the banking crisis in Europe. Senator Mark Warner from Virginia is chairing it, and he is with us exclusively this morning. Senator, always good to talk to you. Good morning.
Good morning.
The official name of the hearing is the European Debt and Financial Crisis, Origins, Options, and Implications for the U.S. and Global Economy. Origins, I think we kind of have a handle on.
Right.
You got some options?
Well, listen, I somehow feel like America's newest rallying cry seems to be, at least we're not as bad as the EU. Right. I mean, that should not be the political standard which we're held to. Part of this afternoon is just to make sure my colleagues understand, whether we like it or not, we're not going to be able to unscramble these eggs. What's happening in Greece, what's happening in the Eurozone has a direct effect upon our economy. It means that the political leadership in Europe and the political leadership in this country needs to get our act together and put real debt reduction plans that are plausible, believable, that the market will accept in place.
Isn't this an inevitable path to the question of whether or not we are truly, as a country, going to step up, contribute to some big IMF effort to bail Europe out as a whole?
Well, I think those will be one of the questions we'll touch on. But remember, I've got folks who I work with up here who feel like the reaction should be somehow the United States should move away from any of these international organizations, the IMF, the World Bank, other financial players. And I think there is sometimes this sense, not only amongst some of our elected officials, but frankly amongst a lot of Americans, that what happens in Greece or what happens in the Eurozone has no effect on us. But we need to try to drive home that point, that with not only the interconnected between the financial markets, but with continuing weakness in the European economy, with Europe being our largest trading partner, that directly affects jobs as well. So we're going to say, if there is some international framework, America needs to be part of it. It's in our own self-interest.
Senator, today we are seeing the interconnectivity of the markets. We're seeing the market sell off here. Banks are under extreme pressure. Are you comfortable with the bank's exposure to the European financial crisis, or is that a question that you're still trying to answer? We're in an environment right now where we're not really sure what the exposure may or may not be to Europe. And then on top of it, we've got a flattening yield curve, which is really acting as a headwind to banks' earnings power in the next couple of years.
Well, one of the things that I am very concerned about is somebody who was involved in Dodd-Frank, and Lord knows there's some good and some bad in Dodd-Frank. But here we are a year after passage of that legislation, 3 years after the crisis, and we still don't know, not only America, we got a little bit of a sense of American banks, depositories exposure to Greece and some of the indirect exposure, but we don't know what the money market fund exposure is. We don't know what insurance company exposure is. We don't know what hedge funds that may be recipients of bank loans exposure is, not only into Greece, but whole European market. We ought to have, one of the things that the FSOC, the Financial Stability Oversight Council, was supposed to do was get these regulators above their silos, making sure that they at least share some of this information. So from a policy standpoint, and I'm not sure the individual market players need to know, but surely from a policy standpoint, we ought to be knowing the level of exposure we have to this first level crisis, but also the potential contagion in Europe.
Senator, obviously filled with doom and gloom, and it makes sense. We see our averages down. We read a lot of negative stories. Ben Bernanke has given us a historic opportunity for both our country and for individuals to refinance. We have the 30-year Treasury at levels not seen in my lifetime. Why isn't anyone able to take advantage of these, whether the government be refunding it at a much lower level, doing a $500 billion 30-year, or people just being able to get a better 30-year on their mortgage?
I think that is a great question. I think all of our attempts on mortgage modification, frankly, well-intentioned, but have been failures. There's still too much friction on the ability and incentives for people to go out and refinance. It's still too cumbersome. We still haven't figured out a way. I think we need to look at much more dramatic ways, major national refinancing. I was intrigued by what Glenn Hubbard and some folks at Columbia put out a number of months ago. It's got some hair on it, but about a massive refinancing down to 4%. I think we need to reopen those toolkits, because the idea that most policymakers had that this was, we are slowly passing this housing crisis through the snake, and if we just did no more harm, that it would pass through. It doesn't seem to be passing through, and I think we need to look at new policy options. I also would argue that one of the things and I had a group over at my house last night, Congress is going to have another bite at putting in place a real $4 trillion debt reduction plan. You know, to my mind, giving the markets the sense that we are going to step up and do this in a fair and balanced way, look at the tax reform, look at entitlement reform, do what we need to do. We've seen all the policy options out there. That in itself would be a great pro-growth effort, because it would at least bring some predictability in terms of one less thing to worry about in terms of overall domestic finances.
One last question on the politics here in this country, Senator. This continuing resolution in the House, as if the market didn't have enough to worry about, now has to at least ponder the possibility of another temporary shutdown. How possible is it?
I just got to believe. Some of your viewers may remember that movie, that Mel Brooks movie, Blazing Saddles, where the sheriff comes out and puts his gun to his head. I kind of feel like, you know, if the Congress is saying, watch out, we're going to shoot again, the last thing we need to do to go through the third act of showing the political class unable to actually just continue to fund the government in a non-controversial way. I was actually, in a way, glad to see what happened in the House yesterday that says, let's not lump a lot of other issues onto this. If we want to fight about FEMA, let's fight about it another place. Let's make sure that we don't give the public and the markets one more bolt that we're going to bring the government to the brink of, once again, shutting down. It makes no sense at all.
We're watching the hearing closely this morning, Senator. Thanks for your time.
Thanks, Scott.